this is Rachel from kalkinemedia. Please subscribe to our channel and press the bell icon for notifications for our latest videos. Now, while selecting a dividend-paying stock, one of the key measures is the sustainability of its dividend payout. When a part of a company's net profits is distributed to shareholders as dividends get too high for a long period of time, it could be a not-so-good move. When the payout ratio of dividends does become too high, it means that the company is not retaining as much profit, which could pose trouble in the future if a need for cash arises. Eventually, it will be forced to reduce or suspend the payout. Another great measure of a good dividend stock, which could pose trouble in the future if a need for cash arises. Eventually, it will be forced to reduce or suspend the payout. Another great measure of a good dividend stock is whether the company is growing its customer base. This suggests the company's growth is not stagnant and customer growth is still there. It also helps the company to directly increase its revenue and net earnings over the long run. This, in turn, helps the company to maintain its dividend payouts and may even increase its dividends along with retaining much of the profits. Now, Amazon.com is the world's largest e-commerce company, incorporated by Jeff Bezos in 1994. Originally, Amazon was only a bookseller and intended to deliver books to readers around the world. Today, after almost 25 years, Amazon is a global technology giant. It provides services such as online video streaming, simple storage services, Amazon Web Services, amongst others. Despite being a trillion-dollar company, currently Amazon does not pay dividends to its shareholders. As already mentioned, dividend-paying stocks generally pay dividends out of their net earnings. Companies have several options when deciding what to do with their net earnings. Valuations of almost all FANG stocks are up through the roof, but these companies top the list of growth-oriented businesses. The top priority of Amazon is to invest in its growth. Investing for the future is something that Amazon has been doing for the last 2 decades, and it's quite aggressive at that. Amazon's total net income for financial year 2020 was recorded at over $43 billion. During that same period, Amazon spent $59 billion on property, plants, and equipment, more commonly referred to as capital investments. In other words, instead of keeping a proportion of net earnings for the future, Amazon is going one step further and spending more than its earnings on growth. Amazon is so focused on its expansion plans that it dipped into its savings, as after exhausting net earnings, to finance for these growth opportunities. These investments are reaping benefits, making one of the handful of companies in the world to have a market capitalization of over $1 trillion. Amazon is doing well to fund these expansion efforts with much of its external sources. The company has been able to increase its earnings per share at a compound annual rate of 32.4% over the last decade. Now, despite such a rapid and consistent growth, the net debt rate is only around $3.15 billion, and it could be managed easily considering Amazon's gross revenue in financial year 2020 was around $386 billion. So when will Amazon pay dividends? Well, as long as the expansion opportunities are lucrative, Amazon's management would continue to reinvest the company's earnings for growth. Eventually, though, with this rapid growth, there could come a point where total earnings are consistently more than the further growth opportunities it can find to allocate its earnings. This is often referred to as a stage of maturity in a business cycle. Then the management might decide to start considering rewarding shareholders by paying out dividends. Interestingly, the longer it takes for Amazon to reach this point, the better it may be for shareholders looking for dividends. That would mean by the time Amazon reaches a plateau, it would have already utilized much of the growth opportunities and it can lead to bigger and more sustainable dividend payouts. Currently, Amazon may not be a dividend stock, however, it has strong potential to become one in the future. Now, if you like this information, please like, share and comment on this video and subscribe to our YouTube channel. Press the bell icon for notifications for all our latest videos. For regular updates and more information, log onto our website kalkinemedia.com. I'm Rachel Jones, signing off for Kalkinemedia.